Thanks for joining us today, and it's going to be great to discuss the regulatory climate that exists, some of the challenges, and I think also some of the opportunities. It would be great to maybe just do some introductions. So Matt, why don't we start with you?
Sure. My name is Matt Ford. I'm a partner at Bartlett Beck. We're a trial firm. My practice is mostly relating to patent law, products liability, but we also do some work in crypto, as you know, and other areas of the Web 3.0.
Excellent. Erica?
Sure. Hi, Erica Harford. I most recently served as Associate General Counsel at Anchorage Digital, which is a diversified digital asset financial services company integrating sort of trading brokerage activity for spot digital assets with custody, federal charter bank for custody of digital assets. I'll kind of jump back a little bit and give a little bit additional history and just say that I began my career doing defense work for securities litigation matters, and then moved into in-house role with a diversified commodity trading company. And so sort of through those two verticals, I meandered into digital assets and have found that it's sort of a perfect spot to be right now with everything that is developing in the industry.
Amazing. I think you mentioned that you've been in crypto for 7 years, so I mean, that's a long time in this industry. Kate.
Sure, yeah. Hi, Kate Rowan. I am also a partner at Bartlett Beck with Matt, and it's a very similar trial lawyer with a portfolio of intellectual property, product defense. And then additionally, Matt and I also teach a class at the University of Chicago Law School on blockchain and the law. So we've been dabbling in all aspects of where the legal world and the blockchain world collide, which has been an exciting arena over the last couple of years, and particularly the last couple of weeks.
Exactly, and I know that I came to one of your classes once, and it was definitely a little intimidating room full of budding attorneys. And Stephen.
Yeah, Stephen Gardner, and I'm the Chief Legal Officer for Zero Hash. Lucky enough to have been with the firm for 5 years in multiple compliance and legal roles, and just generally have a background in regulatory work, so representing institutions against their regulators, which I think is fitting now.
Excellent. So maybe on that note, maybe Kate, we'll start with you. What do you see as some of the current challenges? And it's a big question, given the kind of stack of different actions that we're seeing. It'd be great maybe to get an overview from your lens.
Sure, absolutely. So we're obviously kind of coming to a head of where the regulatory world is not providing a lot of guidance, but certainly providing a lot of litigation for the crypto world and pushing forward in enforcement actions without giving anybody a roadmap of how to get away from those enforcement actions. But at the same time, we're also seeing Congress finally sort of engage a little bit, and maybe with a hint that Congress is going to get involved. And so it's just a timing battle of, is Congress going to catch up and get out front of the SEC, or is the SEC and their enforcement actions going to be driving the boat? And I think for us on the legal end, there's also a real question mark of how the courts are going to react to the SEC seemingly getting way out in front of its skis without the backing of any congressional authority and where they're headed. And we don't know yet how the courts are going to react, because nothing has gone far enough to get a true decision. It hasn't hit the appellate courts, and it certainly hasn't hit the Supreme Court. And I think there's a lot of doubt on the legal side of how each one of those levels of courts are going to react to the SEC's current stance, which is that they have the authority to do what they're doing, despite giving a roadmap for companies of how to work within the bounds of the current landscape.
Yeah, maybe Erica, to add on top of that, we were talking about kind of the recent history. I mean, SEC is definitely top of mind, but you were sharing me kind of the different actions that currently are there. Maybe it would be great to get your thoughts on that.
Sure. A lot of attention has been paid to the activity of the SEC. It's a very vocal agency, and obviously there has been major sort of enforcement activity coming out of the SEC, but the CFTC has also been active in this space. Somewhat of a smaller agency, and so I think it takes a somewhat more selective approach as it sort of articulates its position with respect to digital assets. And one of the more distinctive aspects is that the CFTC, I think, has said very clearly that certain digital assets are commodities. It's been sort of straightforward in articulating its stance with respect to certain digital assets, whether it's Bitcoin or Ether or others. And it's also taken a position with respect to DeFi that is fairly significant. So there are, maybe less attention paid, but very significant activity coming out of the CFTC as well.
Maybe a link to both of those points, Matt, on the point of the courts. Maybe you can give a brief, you're a litigator, and there has been some movement, I would say, in the courts over the past few weeks and months, and maybe we could get your thoughts on that.
Sure. So the biggest, I'd say the seismic shift that's occurred in the last couple of weeks is the lawsuit against Coinbase. This is really one of the first lawsuits in which a major exchange has been targeted with no allegation of fraud. It's not as though the SEC is saying that Coinbase did anything wrong to trick investors or anything. It's just more you fail to fall within the regulatory structure that's been set up for securities in the United States, which is curious along a few different lines. One is that Coinbase is a public company, and they submitted countless documentation to the federal government in order to be listed in their IPO, the entire time knowing that the company sells all the coins, facilitates the trades and all the coins that are at issue right now. And then within 2 years of its IPO, it brings a lawsuit saying, by the way, everything except for Bitcoin, Ether, and maybe some stable coins are securities, and you're facilitating the trade of unregistered securities. That is quite a seismic shift. The other part that really came out from the lawsuit to me is that for the first time, it seems that the SEC has signaled its strategy as to how it's going to go after altcoins by, in the complaint itself, listing, I think there are 5 different coins that it says are unregistered securities. A lot of those, one of those I know pretty well because my brother worked for Algorand, is the Algo. And I know for a fact that when the company began, it followed the playbook on how to provide an ICO that everyone at the time assumed was consistent with securities law. And now, after the fact, the SEC is saying, no, that's actually a security, not by going after the company or saying that there's anything the company has to do, but by going after the exchange and essentially drying up any liquidity that these coins would have. So it's really, there's some huge changes that are in the offing, potentially if the SEC is right. But to Kate's point earlier, this is finally the court's ability to weigh in to see if the SEC's maybe out over its skis and maybe overinterpreted the authority it's been given by Congress and the governing statutes.
Absolutely. Maybe, Stephen, you can tie that together a little bit. And also, we've spoken about the courts, we've spoken about the regulatory agencies, and then I think we kind of alluded to Congress in the US. And there's obviously a number of bills, the Warren bill, McHenry, and several others, including the stablecoin bill. I'm curious, and we'll go around the group as well, but in terms of what you think these legislators should know, right? Given we've obviously focused on the CFTC, SEC, there's also obviously state regulators as well. So it'd be great to kind of get your thoughts on that.
No, I appreciate that. And I'm glad you said state regulators, because I think that's missing from the conversation sometimes. That's how we're regulated at Zero Hash. It's how most crypto firms are, Coinbase and others. And the states have managed to address these problems. If you look at New York, substantial progress made in Illinois, California, Louisiana. So I think there's guidance already there. You could probably follow what's already been put in place in some of these states. But you also, I think, want to separate the idea of market registration and market activity from on-chain transactions, utility, purchasing of NFTs, remittance flows. There's all sorts of ways crypto is now in the financial infrastructure of a lot of businesses and is facilitating a lot of value, I think, for those users. So I hope that Congress would take that into account and not try to replicate secondary markets at the securities level for all activity. I think you would want a broader bill, and the bill coming out of the Senate last year took some of that into account and gives the states their ability to kind of still regulate money transmission and those remittances.
Yeah, I think that's a great point about the utility of this. Fundamentally, it is a technology that can be applied to pretty much anything and everything. Maybe Kate, maybe you can share some thoughts on some of the bills that we've seen. And again, what is maybe missing from the conversation? Things tend to get simplified in this space, but with 4 attorneys, I think we can go a little bit deeper.
Yeah, absolutely. So I think that's things get simplified, and the political messaging that is can be broken down to sound bites is what comes out. And that's what's so hard when you're dealing with a new technology that's not something that's tangible to your everyday American and certainly not your everyday politicians. They don't want to know what's going on in the technology behind it, but that's what's so exciting about this, right? This whole space is the technology and what's being built. And so the real, as we're seeing in some of these bills, they have pieces. They're starting to see a little bit, and that's what we don't want to quash, right? That's what we want to make sure that however it's regulated, wherever this lands, that we're allowing the technology to continue to grow. Because the technology to base is not, that's not what the SEC should ever be after, even if they're trying to make sure that consumers aren't getting hurt and there are protections in place like there are in other areas, other securities. But the bills, we almost need to take pieces from each of them. And we're seeing this more outside the US now than we are in, and I don't want to get too far ahead of ourselves, but that other places are able to find ways to let the technology grow while still putting in place measures to protect the consumer on the back end.
Yeah, absolutely. Erica, would you like to add anything else?
I would add that as you think about consumer protection, which is a clear focus of legislative efforts and enforcement regulatory efforts as well, we are talking about a technology, and it is not the role of the government to be picking winners and losers among technology companies. It is the role to be creating sort of consumer protective, sort of pathways for facilitating the growth of innovative companies. And so as we think of consumer protection, I think it is important not to lose sight that consumer protection is not just protection from sort of bad actors, which it certainly is, but it's also creating pathways for innovation, for development of technology, for efficient markets, for transparent markets. And one space that we see that happening in the digital asset industry is with regard to commodity futures. The CME and other exchanges, we have exchange-listed futures on Bitcoin. Certainly, having those products has led to more transparency, to more efficiency, and more sort of confidence in that particular market. And as we sort of approach the specifics of legislative, proposals, I think it's important to take a broad view with respect to what are we protecting.
Yeah, Matt, it would be great to maybe you mentioned to me, obviously your brother, and we've spoken quite at length about different implementations and utility use cases, and I think that's often lost from the discussion. It'd be great maybe to hear your thoughts. I mean, for example, Starbucks, right? Starbucks have built a product on Polygon, which is obviously, has been mentioned. Maybe great to get your thoughts on some of the utility use cases, some of the thoughts on the bill and how it can actually be applied.
Yeah, so I have the luxury of ignorance in the technology, which is great. So I can give you maybe just the higher level view, which is at base, as we've been talking about, it's just a technology. It's just a protocol in which you're basically maintaining a ledger. It's just an open ledger, which in any other universe would be accounting. But here, because of the technology, you're able to distribute and obviously have a trustless implementation of almost anything. It just so happens that all the money at this first tranche of development within crypto has been in the banking space and in the finance space, and that's run right into securities laws and the ability to navigate around those. But I do think that in terms of the overall outlook of the technology, nothing that's going on today legally in terms of what what Coinbase is going through, or the SEC is trying to implement, or the CFTC affects the core technology. All it does is say, in the context of using it as a way of gaining money for projects and essentially as a fundraising tool, you can't do that. But as a way to other use cases in terms of tracking, whether it be races or whether it be supply chain or anything else within a larger company, it doesn't say anything about that yet, but as it matures more, we may start to run into more issues that we're seeing in the finance space as the currencies within a company become more like a currency or a security.
Yeah, maybe on that point, Steve, you can. We spoke at length, I think, yesterday about the nuance between an investment contract, and maybe you can share a little bit more on that point to follow up.
Yeah, definitely. I think everyone's heard the term Howey test more times than they probably ever thought they would in their career by now. But essentially, we're talking about assets, and they're applying a test of arrangements to assets. So a Howey test, in my view, is meant to test the relationship between parties. and what you expect in that relationship. So I think when you take that expectation of profit, just call it speculation, basically, and apply it to anything else. You can find securities everywhere. Pokemon cards become securities. Baseball cards become securities. And that's why I think it's so important for us to remember there needs to be a relationship between the issuer and the buyer. And I think that there can be plenty of arguments made that those relationships existed at some point. But let's think about when that breaks down and let these assets just be assets. Oranges can be oranges, right? So
excellent. I think what we often take a very U.S.-centric approach, and I think what's interesting, right? I mean, Zero Hash, we're regulated across the globe now, registered as well in Australia, New Zealand. We have pending applications in the UK, within the EU. We have a Brazilian entity, Bermudan entities. And so we take a very global view to this and our global client base. Maybe it'd be helpful, Erica, to maybe talk a little bit more about what are some of the lessons, what's working maybe in other jurisdictions, maybe what's not working. Because I think, to Stephen's point, we don't always need to redesign the wheel. We can look afar. It'd be great to get your thoughts on that.
I think one of the things that is discussed widely, but bears repeating, is that in most of the rest of the world, there is not this distinction between securities and commodities products. And so the approach from a regulatory standpoint, often you're dealing with a single regulator as opposed to multiple regulators. You're dealing with a single set of laws and regulations to ascertain sort of compliance with. And the approach is more looking at, is it a type of financial product that is already regulated, or is it a different type of financial product? That's an approach that's different from the one that's been taken so far in the United States. So I think that is one of the main things that we can look at and learn from in looking at, how digital assets are being treated by outside of the United States. There's another aspect which I think is, sort of the willingness to sort of create proscriptive pathways for registration and participation in a regulated sphere. And you see that in particular in places like Singapore, where there is a clear pathway for how do you go in and sort of really truly meet with that regulator and get a registration. And that clear pathway, which the most analogous here in the United States is really among state regulators. That's where that work of creating proscriptive pathways has been done in the US. That's another space that it's different when you look abroad versus in the United States, other than, I think a lot of work and a lot of respect should be given to the state regulators in terms of how they've actively worked to create ways that you really truly can go in and enter into the regulated sphere and participate in the industry that way.
Absolutely. Maybe, Stephen, you're the Chief Legal Officer of the company, and obviously lots of different regulators that you deal with obviously the team. It'd be great to maybe get your thoughts on maybe the global landscape.
Right. I mean, I think starting in the U.S., regulators like DFS are trying really hard to understand the market, and if you look at the virtual currency regs, they don't regulate markets. They regulate kind of you offering crypto asset services as a whole. I think that's a really good approach. And you move over to Europe where they have MiCA has been passed and it's going through rulemaking. But I think it shows that people can get together and agree to put into place a regime. So I think that just from a principles basis, that Europe has progressed far ahead of the United States. And individual countries will take their own view on crypto assets for sure, and that not that Europe is cohesive, but even Australia, I think they understand the real risk are AML risk and money laundering risk. So it's really just a money laundering registration. You make sure that you know your customers, and I think a lot of countries are taking that approach. So I'd like to see kind of things that treat crypto assets as an ecosystem as a whole, like New York has done.
Yeah, I think one thing that's often missed, and you both touched upon kind of these core principles. I think we're actually, a lot of the time, people aren't that far. We often share the same principles of what we're trying to achieve with regulation. I've been in this space since 2017. Some of the things that have happened in this space, it makes me, disgusted, frankly. I mean, you live and breathe this space and you see it, and you share those same principles often with regulators, with legislators. Maybe Kate, you can talk a little bit more. What are the core principles that we focus on? We spoke a little bit about consumer protections. We spoke a little bit about AML, money laundering. What are those key pieces?
Yeah, so I think that it's a great question, and one that I think the industry has to continually ask itself, because the biggest problem in coming up against the SEC and even in the US Congress that crypto has is bad messaging and really bad like spotlight people out front, right? There's just been a stream of bad actors that have come out to the front, and no one in the industry standing up on a soapbox with a really positive message on the backside defending the space and representing the good in the space and the technology and what it can do while still having AML and fighting against fraud and just all of the things that I think the good actors in the space would say. Yeah, we don't want the fraudsters out there representing our space. We want to show what this technology is capable of, and that it is capable of helping people and providing to people that are otherwise unrepresented in the economy and underrepresented, and giving them access. And unfortunately, those voices have been drowned out. So it's about making sure that the voices in the space are saying loudly and clearly, we believe in certain types of regulation and protection and consumer protection, and making sure that the little guy's not going to get crushed when the big guys walk away with millions of dollars and move overseas. But doing so in a way that allows the technology to grow, because that's how the general public will see the most benefit, and really getting the message out there and changing it. I will add, going back to what Sean was saying on the European side, I think it's actually the best thing for U.S. companies that Europe has gotten ahead, because there's nothing that gets Americans moving like competition, nothing. And so having competitors get out in front of us is probably the best thing that could happen for this space from an American perspective.
Yeah, I think some friendly competition is always a good thing.
Always a good
Obviously,
thing.
This week in the UK, Rishi Sunak, the Prime Minister, really pushed a lot of parliamentary discussions around what can be done to really make the UK the Web3 capital. There's obviously the big news of Andreessen opening its first offshore or outside of the US office. I mean, Matt, maybe you can add a little bit more around this international landscape, the core principles that I think the UK, Europe. I think largely it's an implementation aspect. I think that we're talking about here. But it'd be great to hear a little bit more from you.
Yeah, no, I think that there's some flexibility in Europe that we're not used to necessarily seeing in the financial markets from America. We think of ourselves as, rightfully so, as having one of the greatest financial systems in the world, but in crypto we're behind the ball, given, I would say, in part the inability for Congress to step in and get anything together, the fact that the agencies are having to step in, and that's all very controversial in terms of what they're doing. Whereas in Europe, by virtue of their political will, they're able to put together a system in which you get, as you said, some of the virtues served. That I think core among them is free access to capital, or very ready access to capital to be able to fund businesses and new implementations. That was kind of the double-edged sword with the ICO market. On the one hand, there's free money, and we're on the tail end of one of the longest bull markets in history, and companies are able to get free capital through ICOs to fund a very exciting area of technology to develop this new form of working through the internet and interacting with people throughout society. And that onrush came in, and now it's going to dry up. And so I think if we see in Europe, it sounds like through MiCA, they have a system where you can get access to capital through coins much more quickly, and we see great ideas coming out of Europe. That's going to be something that will take over. But right now, to Eric's point, we have concerns about consumer fraud because of FTX. Before that, it was crime because of rogue states like North Korea or even Russia that were monetizing off of crypto. And I think at some point the pendulum will swing back as we see, to Kate's point, we see competition more towards this, creating liquidity to fund these great ideas as we continue to build the ecosystem.
Yeah, Stephen, maybe you can add a little bit more about this kind of, the core principles. I sometimes say that regulation is the floor, not necessarily the objective. Maybe you can talk a little bit more about core principles.
Sure, I agree with everything that's been said. I mean, I think we've heard, a lot around consumer protection, and we act in this industry, and we kind of take it personally when we see these bad actors. Speculation did suck all the air out of the room, and people just did, some bad things, and without much guidance or without great regulation, that was able to take place. I think proper regulation will force the good actors to be the most predominant players, and folks like us. So I think, I like to say us, take a proactive approach to consumer education, consumer protection, AML programs, monitoring for manipulation of markets and things like that. You want customers to have access to those tokens for capital raises, but you want those individuals to have all the information they need to make an informed decision for themselves as well. And so I think when you look at what the SEC does do right in the security space, which is disclosures, I think that's something that we need to focus on as well, is giving information to people.
Okay, I'm going to do something that I say that I don't do in this space, which is it's almost impossible to predict a week or 2 or 3 weeks ahead. But how does this potentially look in a year's time, 2 years' time? I think Matt made the point that the pendulum does swing. I mean, in 2017 there was the big conversation around crypto as a it was this basic narrative that crypto was exclusively used for money laundering with the BitMEX case. Clearly that was part of the space that people wanted to wash out. But obviously the pendulum has now swung forward with how much detail you can put into with chain analysis, elliptic, that government agencies, they themselves use now. There's actually a huge amount of transparency. So I do like this concept of the pendulum swinging. Does the pendulum swing back? What does that pendulum swinging back look like from your perspective?
Yeah, I actually, as nerve-wracking as a period we're in, I think the future is bright. And partly I think it's when the money is not abound and there's not just fortunes to be made by bad actors, I think the serious people get to work and they rise to the top. And so I think we're going to both see the technology really reach its pinnacle and to the point where it's distributed and regular people really understand the benefits. And I also think that as slow as it might be, whether it's through the court system or through Congress finally getting its act together with pressure from other countries outpacing us, I do think the regulatory landscape is going to shake itself out, and there will be a path so that the good actors can get out there and start making these products really usable and beneficial to the general population. So I think it's going to be a really bumpy road. I think that there's going to be a lot of setbacks and a lot of hard days and bad days. But I do think if we start to push out our time frame and pull back and see, I do think that we have really exciting days ahead.
Maybe on that point, Erica, you've obviously been in the space for a while, and I would say being in the legal regulatory compliance, I mean, it's really non-stop. I mean, what motivates you? What excites you? Why do you do what you do to that point of the exciting aspects here?
Well, I would say it probably speaks to a quirk of my personality, but it is impossible to be bored in this space. The velocity of activity is not something that I've ever seen in my career, but I think that speaks to the importance of the industry as well. And I don't like to make prognostications about the future, but what I would hope to see is a greater recognition of the benefits of digital assets, particularly in reducing costs and providing accessibility to capital to persons who, have limited accessibility due to, jurisdictional locations or, government regimes outside of the U.S., other things. I would like to see sort of greater recognition of how the digital asset industry has really fostered an environment where you see an incredible diversity of leadership in financial services. I think it is an industry where women have risen to, sort of primary key roles at a lot of participants in a way that's been difficult outside of in more traditional spaces. I think that I don't know if there will be more certainty in a year or two, but I think it will be moving to that direction, as I agree with Kate wholeheartedly that, that competition is a great motivator, and there is that competition now. So that will drive activity.
Yeah, no, absolutely. I think the use case point is interesting, and sometimes I think you have to remind yourself of those use cases. I mean, we, for example, have an engineering hub in Brazil. And you were mentioning about the lower cost of payment rails and how quickly you can do these things. And a number of our team get paid through crypto rails. And I think that is one of the reasons why we are so bullish on actually scaling our international team, for example, because these are people that use this technology every single day. And I think that's pretty inspiring. Maybe Stephen, you can talk a little bit more about not trying to a crystal ball, but what are some? I think the common thread is around the utility of this technology, and I think we hope to be part of that story. Maybe you can talk a little bit more about that point a little more.
No, I think it's crucial that the industry embraces the utility of the technology, and I think when you look at large international firms like Stripe, PayPal, Visa, MasterCard, when they explore this technology, they're not trying to create new markets. They want to use the rails. And so I would hope that some of those players can put their voice forward too and advocate for something responsible out of Congress that allows the rails to be used more. And I think our partnerships with some of our clients, the things that we get really excited about and talk the most about are those utility rails. And so I think speculation should remain. I do think markets do have their place. It's an incentive to build a new product and a new asset, but it shouldn't be the only story.
Well, thank you all. Really, really appreciate your time and the thoughtful discussion.
Thank you.
Thank you.